Good morning. Hope everybody had a great weekend. All right, new all-time highs. Here we go. Dow is in new all-time high territory. I've got the diamonds up here so we can see where it's trading, and we can see almost at 245-ish, 275. All right, so right about there, gapping above resistance. And you know, this Friday's close certainly suggested it was going to go higher, and now on a short-term basis, I mean, the danger is buying this gap up from a short-term basis. Putting a stop, say, under Thursday's low, if that's what you intend to do, I think makes sense, and share sizing it accordingly. For those that are new to the room, I will find a link to a page that covers basic share sizing to get the gist of it. If you're not familiar with it, it'll save you from some terrible losses, just that basic concept. Anyway, so at this point, one of my thoughts over the weekend was, yes, it makes total sense that the markets would follow through to Friday. Ideally, they would have gapped a bit lower, and then we would have bought that. Thanks, Dan. We would have bought that pullback into some intraday support. However, now we've got this gap up here. So the other thought was, well, maybe it just keeps going. So, we have our trading plan, right? What is our plan here? Well, it could gap up and just crap and fall back in and fall into the gap fill, which that's where we're going to want to buy it since the trend is up with the appropriate pattern. However, if it keeps rising into 10 o'clock, if we were to get some type of M-top type of a pattern or breakout failure, intraday traders could short that. And if it keeps going into 10:30 or so, and then we get a bearish pattern, I think that should be the next short setup. And that's an intraday counter trend trade is all. Up at new all-time highs. We have the seasonal bullish end of year period. That does not mean pullbacks along the way to continue higher. Won't happen. So just keep that in mind. I just don't think that this is a no-brainer run to the upside that is just going to continue. It would be pretty amazing if it went vertical from here. I don't expect that. There's always the looming China-US trade deal to throw a monkey wrench into things. So we'll just see where that goes. Right now, prices across the broader markets here, you can see the equity markets here are all up and pushing higher. Oil is up, so maybe that's a turnaround. We'll take a look at the chart. Bonds are down a bit, which is what we would want to see. Gold is up, which is kind of interesting, and silver is up. So let's take a look at what's going on in the futures markets. So S&Ps, you can see pushing up here, and you can see that run on the hourly chart just continued from last week, right? So this was the Fed day, and the chair's comments, which were embraced, and prices ran up. And then China was like, oh, maybe we don't believe President Trump. Maybe this is not going to happen. And down we went. And then the president, as I wrote in the letter, my impression is, and maybe it was the correct thing to do, blinked and said, you know what, we'll sign phase one of the deal. And the market was like, wow, thank God he wasn't stubborn. And up it went, and here we are pushing higher. So I guess 3,100 should be the next target as a whole number as to where we are here. I think that's within striking distance and pretty reasonable. So if we get a run into that, into 10 o'clock or 10:30, that could be the point where sellers step up and, then we see how it all pulls back from there. But right now, I was just looking at this daily chart and just look at this, we talked about this consolidation a week ago or so, a week and a half ago. And I spoke about the fact that it was bullish because it was going sideways at resistance, and that suggested that prices could continue higher. And now that's what happened. And so as we look at this, you kind of got actually the measured move already And if we look at it like that, but maybe this is actually, a continuation. So a measured move here, starting out of this base, we get a little correction bar, and then we project pretty much, we can eyeball it about the same distance there. It just works out that way. That symmetry. It's one of the more only esoteric thing that I look at as far as possibilities. Market just has to, it just seems to have that type of symmetry a lot of times where you get these measured type of moves. Anyway, so here kind of puts us in the same idea of that 3,100 level as an intermediate target for the moment. Now, as things are shaping up here, I'm looking at this hourly chart, and as you start to look at, prices for a very long period of time, as I have, you have to be a little careful about projecting what hasn't happened yet. But as I'm looking at this, and some of you that have taken MTS or the swing course, you might already know what I'm thinking. But this little 3-bar consolidation followed by a range expansion bar, and this bar is just starting. So, but let's see where it is in 51 minutes. If it closes like that, it is a potential breakout bar failure. Now, that doesn't mean it can't get to 3,100, but this little move right there, if it breaks under this low, you're going to see a pullback to some extent. And it might only be to here, but those are the jiggles that happen, on all time frames. So this is an hourly time frame. If I saw that on a 5-minute time frame and prices had run up in this way and it was at resistance, this isn't, I would look to short that or at least exit long positions. So we'll see where this is. In addition, there's something to keep in mind. This kind of a pattern that's running up pre-market, it has a tendency to continue for a very short period of time at the open, and then start to come in, and as traders get excited and buy the gap up. So I guess the takeaway, no matter what happens here at the open, whether it continues to run or it fails, is that because of this run here that's happened, it's pretty big from an intraday point of view. I would be a little, skeptical or, cautious here at the open as far as initiating positions without the appropriate share size, and maybe finding things that are just starting to move or would be the best thing rather than finding patterns like this that have already moved and gapping higher. So a little common sense. You can see the weekly here is up a bunch here. But in any event, we've got weekly uptrends on the weekly, certainly the monthly, which you're not looking at, but it's there, and the daily and the hourly. So all cylinders are firing to the upside, and that's a good thing for bulls. Let's clear that up. Looking at the cues. Right. Pretty similar pattern. We've seen that a lot. Right. Move up, consolidation, continuing to move up. Nothing to stop it at this point. New all-time highs, similar pattern, the little consolidation. This could be right out of the textbook if this closes with a narrow range candle and then it breaks below it. That it's in text and pictures right in the course. A breakout above a pattern like that with a minor topping tail with an inside bar, and then it trades below the low of the inside bar. So we'll see what happens. It's still a long time to go in this bar, but that's what I'm have in mind, is to see where this ends up at the end of the hour. YM breaking out above here to new all-time highs. So maybe some of the go-tos, which we can look at in the room, would be some Dow stocks that haven't participated, that are playing catch-up. What's going to drive the Dow higher? Well, probably not what's been running already. While they may move up, probably, I think, the catch-up play, stocks are playing catch-up that haven't participated, and then they begin to join the rally as money flows into them. Or let's just say that they were heavily shorted, and as the market strengthens like this, shorts buy to cover. MDY, possibly. Well, you know, the Russell is knocking on the door of getting through the top of the range there. Where's my MDY symbol? Maybe it's not in here. So it is also at the top of the range. And looks like it's peeking its head above that. So, you know, Paul, I think just like everything else, if we have something that's breaking out, it's up several bars in a row. We've got the markets up where they are at. They're gapping open here from Friday's move. We have, if this is the right chart here, we've got some gas in the tank with the internals, right? Breath got down toward the zero line. That was a good thing. Sentiment backed off from this extreme here through the upper bands. That's a good thing. Friday, option traders, right? The wrong way option traders, as we call them, they're getting paid today, right? Their bets paid off and the market's gapping up. I believe because of history, that's going to have a tendency for the markets to come in. So these markets that are breaking out, they should go higher, but I think it makes more sense to look to buy them when they retrace into the gap or whether they can create some support than looking for continuation patterns versus just buying them at the open on a gap up where there's a void below. So I think everything can go higher based on what's happening here, but where's the entry point? The same thing with the Russell. Russell here is at 159, 50-ish, right? 35 looks like it hit 50. So up through the top of the range, it went from 155 almost to 160. Maybe it runs to 160 into 10 o'clock, and then it starts coming in. And so then let's see what happens as it comes in, even, whether it's 12 o'clock, 1 o'clock, maybe we get a rounding bottom on the 5-minute chart and we get long. But I don't think, from my own bias point of view, it makes sense to be buying a gap up after a wide range bar on Friday with the wrong way option traders getting it right for once in a decade. So that's a made up number, so don't go with it, but they're wrong so often that, IJR, well, I think they're all going to do the same thing pretty much, Alex, so maybe that is a better bet. I mean, I think all of these markets, whether it's IJR, the mid cap, the Russell, they're the ones with the big voids because they were the underperformers. So going into the end of the year, these make sense to be the ones to bring up the rear and should be the ones that outperform. And so underperformers near the end of a move typically become the outperformers as they play catch up. So it's the same thing whether you're looking at a particular sector that's running up, whether, let's just pick semiconductors, right? And so maybe Intel, right, leads the way and runs up and becomes a climactic. And all of a sudden, some other stock, AMAC or Xilinx, which has been a dog, the money starts flowing into that. And that's a one way of measuring, whereas a sector has probably hit its limit where even the dogs within the sector have had nice runs. So, it's another way of measuring have things gone just too far. But the beginnings of, this particular sector, the small caps coming out of the range, the Russell coming out of its range to push up. I think they're all going to move pretty much the same. Which one will outperform the other? Well, probably the one with the bigger void. So just eyeball that. Right? Transports also have to get out of the range. Would I play leverage? Yes, absolutely. Why not? I mean, yes, if things go wrong, you're going to get hurt worse. We all know that. But, swing trading, even leveraged ETFs, I would prefer to do that than to swing trade a stock in front of earnings or a biotech stock. That's for sure. You might get a sizable gap, but nothing like what you might get hurt in a biotech stock or a stock that gets blindsided. Look at McDonald's today with the CEO, or what was it? What did it say? McDonald's CEO fired after consensual relationship. He's not even allowed to have a consensual relationship, and the stock is gapping down. He didn't rape anybody, but guy got fired for having a consensual relationship. Anyway, it was in a downtrend. And if it was in an uptrend, you'd say, well, you know, the guy's doing a great job. Let's just bury it. Anyway, McDonald's broke trend here. I think we talked about this a few months ago when some of these big stocks started to fall apart. And so now as it pulls back, who knows where it's going to go. Anyway, I just saw that on the news thing that came across. I was like, consensual. And he gets fired. Yeah. There you go. So what else here? Russell futures, right? Pushing up through resistance, coming up to the next level up there. That's all the data that we have, but pretty much lines up there. It's got a little bit of room. Right? You don't try and get in front of the moving train, right? Yeah, the other side of catching the falling knife. But anyway, you see the same wide range bar expansion there and just a resting period. So nobody's concerned about that resting period unless it starts to move lower, right? Which it's not doing yet, but keep an eye on that. Oil, right? Breaking out, coming back up off of the lows here. Right? Had to go all the way back down to the bottom of the range, now moving up. Maybe finally these oil sector ETFs, which had that nasty gyration last week with everything else, you know, finally maybe they bottom out there. That was a bit of an ugly wiggle, but that's a bottoming pattern. Bonds down a little bit. It's exactly what we should be seeing in this situation, but they're real close to support. So here's something to look at. You know, you don't need bond futures, just look at TLT. Switching that. As far as confirmation of this market continuing to rocket to the upside, you want to see TLT break below these lows here and start heading down to this level. That'll be supportive of the market going higher. Gold is hanging up here. Looks good. Like that weekly chart. We've been talking about that for a few weeks, coming into this area. And so it's holding up here. And silver, right, starting to look pretty good too, with the weekly curling up. So overall, things are looking pretty good. And, you know, I kind of sit on my hands here at the open and see if they run up or whether they pull back or whatever. But, you know, running like this as they have, right? And there's the 5-minute chart there. As a scalper, you know, as a scalper, you know, it depends on if you know what you're doing. You know, it's a little bit of well, risk is measured by your money management, of course, but let me say lower odds than buying after this corrective price action here than buying here for a continuation. Anyway, all yours, Dan.
All right.
Oh, Alex, your question, only when she says so.
All right, I'm just posting something here in open trades. Yeah, Greg, it's not letting me take the screen. There you go. Yeah, when I was looking at the markets this weekend, I know, you know, the put call, Greg talked about it in detail, but just looking at clear price action, I was I was out at the boat show Friday afternoon, but look at this. Little small reverse head and shoulders, two little red bars, shallow retracement. Wow. That I would have loved to have been long that over the weekend. Let's look at gappers first. And so we're going to have to be careful on these new longs with the big gap. I'm just going to, I did put spiders in the advisory letter long, but I just sent a telegram to cancel it because the gap is too big. But we're going to have to look at all the opens to see which ones we want to invalidate. I was just working on a multiple time frame for core trades over the weekend. Look at this Hershey. Daily here, bottom left. Beautiful little sell setup right here at the declining 20 and 50. M top on the weekly, climactic sell setup on the monthly. That's beautiful alignment. SYY earnings. That was a beautiful breakout on the daily that we would have given long on Friday, but for earnings today. So it's jiggling around. Looks like it's relatively flat right now. Sprint all over the place. Now it's a bearish gap, but no great pattern. NTs, I don't know if this is earnings or whatever, but nice gap here. 299. That's a bullish weekly too. We'll keep an eye on that. ELOS 1675, gap in resistance. No interest in that. FE. I like this little breakdown failure here. It's in a trading range. It's at the top of the range here, but if it can go sideways, well, it's actually gapping. It's a gap breakout. It still might be a 30-minute high trade. This has spotty volume. Getting rid of that. GCI, no pattern. Costs. 681, gapping way up here, but no pattern. KTP, no volume. These were earning stocks. NSP, that would have been a nice bottoming pattern. I like these when you get the converging 20 and 50, but now it's getting whacked on earnings. Wow, look at that. When you got to go to your monthly. Now, this reminds me of one we looked at on Friday where I said the gap is huge, but because of this price void on the monthly, still looks lower. That's a short on a bounce. Old Uber dog earnings. There's no pattern. Let's see what he does. Kohu 1950, that's a nice bullish gap, but it's excessive. BHC 2650, same. You do not, when you get a big gap on something that's run this far, my mentality is to, as soon as it runs out of steam, short it. MyGen 30s, it's doing nothing, and it's a bio land C. I don't like the way it trades. I saw just on the news a little thing go by that said Ryanair. It was a negative news thing on their, the Max and so forth. So I pull it up, and it's a big old gap up. So whatever news came out, they were expecting something different, worse. Disney here, it's not a textbook W because of the, it doesn't look like a W, but it's still a retest at the 200. I like Friday's close. Now it's gapping up here to 134. So that's an idea on a pullback. And also McGraw put spread. 180 on, Baba. Yeah, this was we entered a put spread on this. It had earnings on Friday, and it had a very ugly close in a strong market. So now, hopefully we can, now this pivot better hold. It's 176 since that's a nice gap up. CEI 411. This thing looked like it was going to zero. My gosh, folks, would you look at this monthly? Look at all these reverse splits. This thing was $17,000 with all those reverse splits. Well, no, wait, this monthly says 300,000. Wow. Keep an eye on it. UAA actually was a bullish bottoming pattern. Again, the converging 20, 50. If it were to have gapped above this, then that would have been a beautiful 5-10 minute high, but now it's getting whacked way down here under 18. And that's because of a new, well, they had earnings, but also some news released about the Department of Justice investigating them for accounting trickery. You never want to mess with a pattern. You know, my study based on news, accounting irregularities, I say they're like the kiss of death. Do not try to bottom fish on those. WMGI, nice huge gap, but nothing to do. Were some of you trading this last week? That's another bottoming pattern with a nice day. And McGraw, if this one, you know what? If this one had that unusual option activity, then they should investigate it. Because somebody, that's a nice bar, that's nice volume on Friday. 840, big gap, but no pattern. McDonald's, Greg looked at. Yeah, that's, wow, that's a nasty gap right there. That was earnings. Lee, that's a small Bear Island reversal. All those people in that gap up bar were stuck. Yep, still looks lower. Oh, I was looking at this one and when my weekend multiple time frame analysis. Well, actually, I put this one in. I'm working on a buy and sell setup, MT Live. And look at that. That is a beautiful textbook buy setup. Wide range igniting breakout, controlled pullback, bottoming tails at 50%. That's a picture of beauty. Still has a little room, but we definitely need a pullback. KHC, this thing might be bottoming. So let's watch this over the next couple of days. It's just, wow, $90 down to 25. And you would, you know, think that that's a real company, whatever real means. Cody had positive mention in Barron's. That was a beautiful breakout here. Let's watch that on a pullback. Package. Here, let me go through our trades in the letters just to make sure we don't get into anything at a bad price. Intel, I gave a put spread with a limit, so you know that's going to have to trigger. But that's beautiful consolidation in the upper half here. You know, if we want to, whenever we think it's safe to take on more longs, that's a candidate. Google, I gave a put spread. T still looks good. Market's overbought, but it's more rested, and we have our stop in place under Thursday's low. To the gap over the entry, 39.02. Open 39.10. Yeah, it gapped over the entry. And so that our rules say 5-minute high. And deer, we have a put spread and a directional. So now we can tighten the stop. Looks great. 174.78.